Hi, I'm Kyle Floyd, CEO and founder of VOXR Royalty Corp. We're a returns-focused mining royalty company with approximately 70 royalties globally, over 6 producing assets, and what I believe is one of the most exciting development stage portfolios in our royalty sector.
Kyle, good to see you, sir. Sorry we didn't get together in PDAC in Toronto, but here we are. You just put out some numbers for 2023. Tell us all about it.
Yeah, Matt, another really good year for Vox. I'm pleased to report that revenue was up by almost 45% over 2022. And most importantly, cash flow from operations was up 157%. And so when we look at how we grow our business, we're really focused on per share metrics and cash flow per share. So pleased to report that we continue to make progress in that respect. And as a result, we've been able to increase our dividend for the second consecutive year, which resulted in about a 9.1% increase in the dividend yield. And presently, it's one of the highest yielding dividends at 2.4% in the precious metals royalty sector.
Well, there we go. All good news on the financials. Nice to see things moving forward. Let's just remind people of the kind of portfolio construction. So, what are you focused on? Who are you focused on it with, and how are they likely to perform this year?
Yeah, so Matt, where we have probably the strongest competitive advantage is Australia. We also believe that Australia is the best mining market to own royalties over in the world. And we have the second largest holding of hard rock mining royalties in Australia, second to Franco, Nevada. 5 of our 6 producing assets are in Australia. We have what I think is one of the most interesting portfolios in the small cap royalty space, in that almost 80% of our assets are operated by billion-dollar companies and above. And of our current producing assets and current NAV, most of that is with multi-billion-dollar operators like Zijin and Mineral Resources. So we have, I think, a very, very undervalued portfolio right now in terms of where the market is on Vox. But nevertheless, a great suite of assets, a portfolio that we believe we're going to be able to continue to grow, similar to how we've grown it over the last 5 or 6 years. And ultimately, we're producing what I believe are the best per share return metrics in the industry.
So how many payable ounces have you had in 2023? Remind me, and because what I'm trying to get at, and have you offered guidance yet?
We have offered guidance.
So tell us about where you come from and where you think that's going.
Yeah, so last year we did a little over $8 million in top line revs. This year we announced $12.3 million in revs. And that's from 6 producing assets, 3 are gold, 2 are iron ore, and 1 is diamonds. So as you look at how Vox is kind of built to grow, most of our growth over the near and medium term, and even really the long term, is gold. We have what I believe is a portfolio of royalties where we have a lot in the development stage that is with very, very good operators that we expect to be built and ultimately increasing our revenue profile over the next few years.
But can you give me a sense of the numbers here? I want to try and understand what rate you get, because you start from a small, humble place and you kind of been profitable every year, and the way that you go about acquiring these royalties is quite unique. You've got your own database. Make sure you're not overpaying. But the scaling up bit is the bit that sort of interests me in relation to what some of the others are doing out there.
Yeah, well, interestingly, Matt, in previous interviews that we've done together, I think we've expounded on what Vox really targets, and what Vox looks for are catalysts that we've seen over great projects where we can go into our royalty database and see that a royalty exists over that project. And ultimately, we want something that's going to be in production in, say, 1 to 3 years. We're solving a liquidity need usually for the group that's on the other side selling us the royalty, or it's a non-core asset. And so we're looking for assets that are 1 to 3 years out from production. One of the things that's held us back, and what I failed to mention at the onset of this discussion, is we also realized up to $25 million credit facility with BMO that's fully undrawn right now. So alongside a balance sheet of about $12 million of working cap, we also have $25 million of undrawn firepower. And we've continued to be disciplined. That's sitting there, allocated or will be allocated to the right opportunities. And what has probably held us back a little bit is access to capital, not quality of opportunity. And so having that excess capital sitting there now for us to draw down at the right time means that we can really be targeted in that, call it one, either currently producing or within a couple of years of producing assets, which is really our bread and butter. Lets us probably scale up the business just as accretively as we've done it in the past. with a lot of very interesting assets. And so the pipeline is now more executable than it was historically. And so we're very excited about that.
Okay, I'm not hearing numbers. I want to get a sense of what could be, because obviously you kind of picked up that evolution package in Australia. You've got a few other things like Higginsville and One Moona, etc., coming through in 2024. I'm just trying to get a sense of that kind of growth that you're going into.
Yeah, so we've given guidance. That 2023's guidance was 11 to 13 million. We're coming out with guidance in that same range for 2024, 11 to 13 million. I think this is a little bit of a consolidating year for us. There's certainly some upside potential around that, but we'd probably rather be a little bit conservative. And then we'll see what 2025, 2026 holds, as we believe we'll have, the addition of probably 2 to 4 new producing assets.
Right. Okay. Interesting. And if I look at this Bank of Montreal, was it $25 million, wasn't it? If I look at that, you've got to take a look at the market at the moment and have a view on, what gold's going to do, what jurisdictional risk is doing out there, and how the market's reacting to just equities more broadly. Because I think the equities market's been tough. It's not necessarily we're kind of not into royalties at the moment. We're not into gold companies at the moment. The equity market is still, they're not into much at the moment, it seems, apart from maybe uranium. So how do you play that given the credit facility that you've got there, and possibly this need to maybe, drive a kind of growth story, maybe surprise on the upside at the end of the year?
Yeah, a couple of things in response to that, Matt. One, we're value players. We've always been value focused. We're generating the highest return on invested capital in the sector. We put about $50 million in buying third-party royalties at $12 million of pure royalty revenue. It's almost a 25% current return on invested capital, and we believe that's very long duration cash flow. So we're value focused. I think that proves out that we're buying royalties at the right valuations, good royalties at fair prices. And secondly, we're really agnostic when it comes to what hard rock mine commodities we're bringing into the portfolio in terms of the royalties that we're buying. We have the biggest weighting in our portfolio is gold. 3 weeks ago, no one cared about gold. People care about gold today with what's happening. The reality is we're going to continue to be value focused. It just so happens that when you look at the combination of our IP, our people, the geographies that we know best, it's very, very heavy gold. But it's because we found more opportunities to find value in gold. That's why our portfolio is so weighted to the metal. So when we look outward or forecast in future years, I believe that's going to continue to be the case. It's somewhat runs kind of counter to the rest of the industry that targets gold or goes out of their way to bring in gold royalties. It just so happens that's where we find the deepest value. So we're going to be continue to be focused on finding the deepest value royalties that we can. I believe that's going to mean that our portfolio remains heavily weighted to gold. And so ultimately, we're not moving around and focusing on different royalties because of what's happening presently in metal prices. It's a much more longer term focus around value for us.
Okay. I met with a few royalty companies when I was in Toronto, and I think one of the companies, Metalla, I spoke to the CEO, and I think one of the questions I asked him was, and I hope he didn't take it the wrong way, was, do you think you've grown up? Right? There was a very sort of excitable, frothy market in 2020. And I know you've been private before you were public, and perhaps, pardon me, you had a longer kind of run up to it. But, there's a lot of companies out there, perhaps learning on the job. There's a lot of companies trying to, the bit of M&A activity as well, sort of unwanted. I think the Elemental guys would attest to that. And then you kind of got these bigger players out there, and who, perhaps you guys look cheap because we've talked in the past about the multiples you're achieving at the moment. What have you learned over the last 3 years in this kind of public environment in terms of the way that you must run your business? Either one, to make yourself attractive, or two, if unwanted, how do you make yourself defensible?
I would say one of the biggest learnings, and again, you note that we were private a long time before that we went public. The public markets pull you to a lot of, it's a little bit of a squirrel with ADHD. That's how I would describe the public markets. And so it's easy to get pulled in different directions and lose your long-term focus. I think as an organization, and it really also stems from just a really good group of long-term patient shareholders, we've never really strayed from our returns focus. So it doesn't matter if uranium's hot as it was and continues to be this year, lithium the previous year, gold now. It's not changing what we look for in terms of quality royalties over quality projects at good valuations. And so value being our North Star kind of allows us to block out a lot of what would otherwise be distractions, noise, and polls to go in directions that we don't think will ultimately create the most value in the sector. So yeah, I think it's a good point. I think we have the luxury of finding value in the space, not historically known or currently known, in my opinion, for finding value, but we have the luxury to go out and find value.
Right. And you kind of still kind of focused on gold because there seems to be a lot of deals out there, right? There's a lot of desperate companies because they probably don't have the right management team and maybe not even the right asset. And then there's like desperate cash-strapped companies like for alternative finance. We've talked about, again, in the past about this being a time for royalty companies and streamers, obviously, to kind of step in and maybe fill a gap, fill a need, because everyone's getting punished equally, good companies and bad. Where do you see the opportunity?
Sometimes I feel like I sound boring, Matt, but it's really just more of the same for us. We have what I think is the deepest pipeline of opportunities in the sector because of how the company was built. We have a competitive advantage in terms of sourcing these royalties. We're seeing opportunities in gold. We're seeing opportunity in copper. We're seeing opportunities in iron ore. We're seeing, the same thing that we've done now for the last 5 years, 6 years, 7 years be present in our pipeline. And we'll continue to execute consistently. I think it's one of the things that investors, maybe one of the big questions, Matt, on Vox that I can share here is I think investors have wondered if we can scale the business as accretively as we grew it in the past. And I'm here to tell you the answer is yes. With what's in our pipeline and with our discipline and our ability to find truly great intrinsic value in what we're bringing into the portfolio, the answer is yes. And this credit facility from BMO, which we're very grateful for, is a big tool in our tool belt to go out and do that and accomplish that for shareholders. So I'm really excited about what 2024 holds. I think you're going to see some really interesting opportunities come into our portfolio. And then the continued organic growth. We have a really exciting portfolio of royalties that's already in the portfolio that we have to pay nothing more for. That's going to grow the business as well.
Kyle, appreciate that. Thanks for the update. Like I say, I think it's reassuringly boring. I like it. Keep doing it. We'll see you soon.
Thanks, Matt. It's always a pleasure.